Welcome to Profiletraders. This is Reza and you're listening to my market analysis for May the 29th. Last night when we were very close to the 24-25 area, I issued an email or a tweet saying that this was a very inflection point. If we were going to cross through the 25 area, we were expecting to see somewhere around 34 to 36 on the upside. But as they tried and failed to do so in the overnight, as soon as we opened and this disastrous economic number that came out showing a retraction of 0.7% on the first quarter hit the news, obviously a lot of people started to question that should the market be at its record all-time high while the economy is actually shrinking. And then the second question that everybody started to ask is that how can we justify a 5.4% unemployment with an economy that is neither growing but shrinking? So everything that people are hearing about the rosiness and the bullshitness that is going on and coming out of the mouth of the Federal Reserve is now getting questioned. As a result, money exited the market without any hesitation off the open. Up to the point where I had a downside target of 2102, as you can see, it stopped right there dead on. And then we are now in a rotational phase down here. Situation is very clear. If there is any brain left in anyone's skull in Wall Street after this beautiful long-lasting orgy that they have been undertaking for the last 6 years with these very bad economic numbers, they will start to take some money off the table. As a result, we should continue further down. Once we break 2102, we should expect 2096 and then 2092, and I'm sure if I go lower, I have other naked POCs waiting down there. Therefore now, the situation is quite clear. Since we had a very nasty failure to break through 25, 27, that area now becomes critical resistance. As long as we remain below it, we should expect at some point to break down and go a little bit further south to the downside. And 92 is my downside target for now if we do break this 2102. And on the upside, you know where resistance is. We just talked about it. Now as for crude, which is another laughable situation where you are showing an economic contraction and then on the other hand you have a massive rally in the price of crude. Now it was very clear that as we were coming down the last time, there was absolutely no rush for destruction. It was a very orderly managed drop until we reached a level of support which we talked about on my daily chart while back. I told you once we're gonna drop down, we will find extreme support at 57 and then 55. So far 57 nailed this low. And now we are bouncing from it, but as we are bouncing, we will now have to deal with a downtrend line in place. Therefore 61 area should start to display a very aggressive level of resistance. Then if we clear that, then there will be a massive run over shorts, and then the upside result could be quite violent, fast and brutal, and therefore we could definitely go reach and test the 62 area. For now, your critical level of support is at 59.20. If we come down this should encounter support and then we should bounce back from it. If on the other hand we come to it and we do not bounce and later decide to break it, then all these singles down there are wide open to be a target down to 57.70. So resistance is 61, support 59.20. And now let's see which side we break. But again, this doesn't make any sense with the economic data that came out today showing a first quarter retraction, unless something again nuts and crazy is taking place in the Middle East that scared a whole bunch of people going into the weekend. If it was a fake rumor or whatever, I can assure you we will retrace it all back. If it was legitimate and real, we shall see continuation for further up. Now take a look at gold. Which I call the abandoned child. Nobody wants to adopt it, nobody wants to look at it, nobody wants to touch it, nobody wants to have anything to do with it. Why? Because no matter what comes out, no matter what it is, one instrument is good for punishment, and that is gold. It is so obvious that it's reaching almost a level of silliness, that it's almost amazing all the effort and the money that is spent to just keep this very specific asset under the water. The reasons are very multiple, many can be questioned, we are not going to go in there, but for now know that the 1180, 1178, or if you want to widen up to 1180 to 1175 is now extreme short-term support. It's going to be tough and rough to break it. On the other side, 1200 is now key resistance. If we want to go up after having built so far a nice bottom down here, we have to pierce through 1200 without any hesitation. Any hesitation upon break of 1200 can be then questioned as suspect and leave the door open for a fake or a failed breakup attempt which could have quite of a sharp counter reaction to it. So that's it for now. You guys have a great weekend. If you are interested to learn this market profile method, you can get all my courses and 1 year to my trading room for $550 from my website profiletraders.com, and it's 30 days money back guaranteed. Enjoy the weekend.